In this video, we're going to demonstrate how Forex Source subscribers made money trading a sentiment shift involving the Bank of Canada this week. Now, the move we're going to be looking at is this one here on the USD CAD. So let's break this down and see how you could have predicted and caught this move using our market commentary. Now, just before we begin, don't forget to hit the button to subscribe or follow so that you'll get notified every time that we release a new video. So firstly, we need to understand the context or the baseline surrounding this pair before the actual move took place. Now, if we go to the Forex Source terminal on the 4th of December, we can see that we released our sentiment drivers report for the Canadian dollar. Now, in this report, we saw that the current baseline for the Canadian dollar was that the currency was being driven based on the market's speculation about what the Bank of Canada would do next in terms of monetary policy, as well as trade uncertainty. And this second part is very important. We highlighted that in their previous meeting, the BoC expressed great concern over global trade uncertainty, also stating that trade tensions were restraining business investment while helping to cut commodity prices. So based on this view, we knew that the CAD was being driven by future rate expectations from the BoC and that a main concern was global trade. So once the baseline was in place, the next step was to identify the type of breaking news that would generate the biggest market moving shift. So in the same sentiment drivers report below, we can see that possible sentiment shifts in the CAD would occur from further global trade developments, as the BoC's monetary policy was very focused and tied to trade issues and the global economy. And we can also see that we highlighted that we needed to pay attention to how much trade uncertainties were influencing the current BoC rate outlook. Now, all we needed next was the trigger. In other words, the sentiment shift that we identified ahead of time to actually take place. So also on the 4th of December, in the Forex Source terminal, we can see that we had the BoC's rate decision as well as the accompanying statement. Now, we can see from this statement that the BoC stated that there was evidence that the global economy was stabilizing, and furthermore explained that growth appeared to be intact and were expected to edge higher. Now, these comments were in stark contrast to the BoC's previous meeting, where they stressed about the dangers and the risks to the global economy, and these new comments were seen as overall more upbeat and more hawkish than the markets were expecting. Now, if we quickly jump back to that chart, we can see that this is the move down, that first initial move down from the BoC's announcement, and we saw that the pair actually kept on edging down lower throughout that session and onto the next day as well. Now, if we go down to the 1 minute time frame, we can see that that is the initial announcement. Now, if we zoom in, we can see, this is a 1 minute chart, by the way, we can see that we had ample amount of time, almost an hour, to digest and evaluate all of this information and realize that this was a great opportunity to sell the Canadian dollar, as this was a more upbeat and hawkish tone than expected from the BoC. So there was ample amount of time to get into this trade, and even if you jumped in right after the announcement, basically right after this first minute, 1 minute candle, if we just zoom out, we can see that the pair continued to fall another total of 80 pips throughout that session as well as the next day. So if you're interested in learning more about how our market commentary can help you interpret news and fundamental analysis and turn that into profitable trades like this, click the link below and check out Forex Source. Thank you so much for watching, and please post your questions or comments below this video, because we read all of them and actually base our future videos on what you guys ask for.